Hello, this is the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. Let's get across those market moves overnight. Global stocks on average higher to end the session. However, AI disruption continues to unnerve investors, with shares in asset managers under pressure following a sell-off in the insurance and software sectors in the past week. Now on Wall Street, the major indices lost momentum after investors dialed back their expectations of more interest rate cuts after stronger than expected US payrolls data. The financial services sector slipped while energy led the gains. The tech sector was mixed, with chip stocks rallying, the software stocks tumbling again, led by Microsoft, and Alphabet also falling. Broker firms came under selling pressure after startup Altruist announced AI-enabled tax planning features, with Charles Schwab and American Price Financial falling there along with LPL. Generac shares rallied after its fourth quarter results. Robinhood shares fell heavily after the retail broker missed fourth quarter revenue expectations. And wireless network operator T-Mobile gaining following its fourth quarter results. Health insurer Humana slid after it forecast profit below estimates. And Moderna shares dropped after the US Food and Drug Administration rejected a review of the company's application for approval of its flu vaccine. Shares of Barbie maker Mattel plummeted as its full-year profit missed forecasts. And after the bell, McDonald's chopped Wall Street estimates for fourth quarter global comparable sales and profit, with demand holding firm in Australia and the UK. Global same-store sales rising almost 6% in the 3 months to the end of December. Well, US jobs growth unexpectedly accelerated last month, while the unemployment rate fell to 4.3%, increasing the likelihood that the Fed will keep rates on hold. But the largest increase in payrolls in 13 months comes as revisions showed the US economy added just 181,000 jobs in 2025, compared with the almost 1.5 million jobs added the previous year, the year before President Trump regained the White House. Meanwhile, the US budget deficit is expected to increase this year to $1.85 trillion. That's according to forecasts from the Congressional Budget Office. That has the deficit at 5.8% of GDP, with it expected to reach 6.7% in the next decade, far above US Treasury Secretary Scott Bessent's goal to shrink it to around 3% of economic output. Well, US Treasury yields climbed following that stronger than expected payrolls report, the market pricing out the chance of further imminent rate cuts. The US 2-year yield jumping to 3.55%, the 10-year at 4.2%. The US dollar index initially rose, then fell. The Aussie is trading at 71.3 US cents, up almost 1%. Oil prices have gained despite a large build-up in US crude inventories, with traders focused on negotiations between Iran and the United States. Brent crude futures up close to 1% at $69 a barrel. Gold has risen on steady long-term buying. Spot gold trading at around $5,090 US dollars. Copper's up 1%. Iron ore little change at 102 US a ton. And Bitcoin, well, that's fallen back below 68,000 US dollars. Let's get across those market moves. Ira Epstein joining us again, as he does on a Thursday, from Linn & Associates. Ira, welcome back. So,
thanks for having me.
Let's start with those jobs numbers then. Certainly surprisingly strong. Unemployment rate falling. What is that indicating to you?
Means the Fed stays on hold, because all they can do by cutting a rate right now would be to increase inflation. Now, there's many thoughts about that. Many people think that the economy is still has problems. If you saw the congressional budget, they came out talking about the deficit, how it's growing, and we're not even hearing anything out of Congress in the United States about what they're doing about the Homeland Security and giving money. My focus for the moment should be on two things. The jobs are behind us, and we know they were good. Now I think you turn your attention to the CPI number on Friday. And of course, over the weekend, you've got to be getting ready for whatever's going to happen between the talk between Iran and the US. They are very far apart, public speaking. I don't know if they're that far apart when they talk privately through their intermediaries. That's what we have to find out. Obviously, with Netanyahu in the White House today, there's not going to be dovish talk. It'll be more on the talk that they better talk to us, they better do it now, and this can't go on forever. And then, of course, you've got to deal with the missiles and what range do they want those to have. Iran said that's a red line. If they hold to that, then what Trump will try to do is get the government to collapse in one of many ways, and that's where I think we're headed anyways.
All right, we did hear from the president bragging just how great the economy is travelling at the moment. Yet then he goes on to say we need interest rate cuts. Is that resonating with the market at all?
Well, it's an interesting time. I can't think of a worse job that Kevin Warsh, assuming he gets through the Senate, which I have no reason to believe he won't, has. What does he do? He's got a president that's appointing him to cut interest rates. He has inflation that is acting stubborn. It's not falling. We just saw the projections coming out of Congress where over the next few years, they're not looking for anything even under 3%. Tell me how you get to the 2% number. I've been with you here, Andrew, for years now. And I said during a long time ago, that 2% number is fantasy. In order to get there, the economy has to collapse. We're seeing the exact opposite. So I think what traders have to understand is the only thing the U.S. is going to do about debt is print more money. And I think you've got to turn your attention for two reasons: to gold for that, and because of the Mideast situation. I don't think that silver has to go with the move. I don't think copper has to go with that. But I think gold is your protection against the basement of the dollar. And I am bearish on the dollar, looking for it actually to fall rather hard over the next 3 to 6 months.
All right, let's turn to the movement with equities at the moment. That AI disruption continuing to unnerve investors. I was mentioning the brokers under fire. We saw, and asset managers also, we saw that sell-off in insurance earlier on, of course, beginning with the sell-off in software. In your view, is that rotation out of tech likely to continue?
Yes. And the reason is we priced in tech perfectly. You and I are talking, we're here now in February in Australia, the 12th, I guess. And what we're looking at this point is asking ourselves, why would tech continue to go up? If anything goes wrong in the systems, anything, it'll snowball domino effect on it. Does that mean to be bearish? I want to be clear on this. Absolutely not. The game's not over till it's over. It does mean that money's rotating out and placing itself elsewhere. Where? In U.S. industry. If industry in the U.S. grows, and it should because of tariffs, Trump's plan was to tariff everything so much that companies come back to the U.S. or U.S. companies expand out to make up the difference because they've got an edge because of the tariff. And that's what's going on. And my guess is, and I don't know it, but my guess, the reason we have 130,000 jobs probably has something to do with that. So when I put that all together, I don't see the weakness. And you have to say to yourself, but Ira, if you're saying that, why would the dollar break? The dollar will break because of debt. And the debt can't be serviced, in my opinion. You're starting to look at balking by China, balking by Japan, of buying more U.S. debt. What if they start selling the debt? Now you have a very different situation. So I do think that gold, last week I wasn't that friendly on it, but the events in the past week have gotten me back to the camp that would say, with caution, you should be buying gold.
All right, so other than precious metals, Ira, rotation out of tech into what? What else are you liking?
Well, if you're looking at the stock market, you go with companies like Caterpillar, things of that nature that are part of the industry. There'll be a point in time when, if you look at the ETF IGV, which is the software ETF in the US, and it's been in a bear trend, it's still in a bear trend, so I'm not saying here to buy it, but I certainly have it on my screen every day. I'm now focusing on it in my nightly videos and showing people that you should have it and be ready, because at some point, what will happen is the software companies will not be going out of business, all of them. AI, which is wonderful, and I use it like mad, will replace some of the companies, but certainly not all of them. And at the end of the day, these companies have a good consumer base, so the ones that survive are going to do very, very well. Microsoft comes to mind. Is Microsoft in an uptrend? Absolutely not. That doesn't mean it won't get to a PE ratio in time where that's the player you want to own. Google, they're spending like mad on the money. The market doesn't like it. Okay, but if you're going to use a browser with a search part to it, that's the one you're going to go to. So again, pick up the quality out there when the chart action says to. The chart action is not saying to, in my opinion, right now.
All right, always terrific to get across your view of what's going on in markets. Thanks for joining us from Linn & Associates.
Thanks for having me.
Let's now turn our attention to the local market. Now, of course, earnings season very much underway at the moment. Some heavy hitters we saw yesterday, also getting across a number of results today. We are expecting a positive start. That's actually lifted just more recently. It was flat, now expecting up around 0.1%. And just in terms of some of those companies we've already heard from this morning, we're going to get across this in the open, but we've got the likes of ANZ that's got a quarterly update, AMP, IAG, ASX, South 32, Northern Star. Much to get across, and we'll do that in just a couple of minutes. Stay with us.